This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, November 5th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn down a quarter at 431 1/4. January soybeans were up 3 1/4 at 1124 3/4. And December Chicago wheat was down 2 1/4 at 548. No export sales announcements here this morning as we're still closed. Government's still shut down. I guess what we know this morning, certainly heavy bean volume overnight. I know we'll talk a little bit about that. Also today, Supreme Court is set to hear arguments based on the tariffs. So I think all markets will, have a close eye on what the response there is from the Supreme Court. I know there's a large number of briefs that have been filed on both sides. So it should be pretty polarizing to see what the precedent is set there at the Supreme Court level. Also, there was some discussion yesterday from the USDA Deputy Secretary on when the government opening, them having $12 billion of funds to allocate to the farmer. This would be much in the same way as the previous MFP program, but there was some interesting verbiage that said that the final amount may be adjusted depending on how the market reacts to this recent negotiated trade truce. So still, clear as mud there on what that looks like. But I think the overall takeaway is let's get this government open. So with that, Dustin, maybe share a few thoughts here as we start the day, and then we'll throw around the room.
Yeah, Dan. I think that last point is an interesting one. They're obviously saying, I think it's been a bit of a Hail Mary for growers, right? If prices don't hold, there's more support coming. And if they do rally, there's probably less support coming, maybe no support. And so there's reason to keep some exposure to the market, in my opinion, just for that reason alone. If you look back at 2020 going into 2021, anyone that just kind of sold out early harvest or right at harvest and then, didn't have any market exposure into the Chinese buying that occurred into March and May that year, the guys that kind of had that market exposure came out ahead. And that was after the prior 2 years of needing to make things meet with MFP payments. So it's a very similar situation. I think there's strong bipartisan support for U.S. growers. And like Justin's been talking about, like it's fairly cheap to keep exposure. It's not like you have to keep it all in the bin unhedged. You can, if you're selling delivery right now, spreads are quite narrow for corn, in my opinion. Selling a December delivery corn contract because that's your delivery period. It's not a terrible idea, I think, to keep calls out in March just to see where things go. And even more so for beans, right? There is no Chinese corn deal, no minimums there. There is for beans. So something falls apart in that contract, or beans do not find support because Chinese private buyers are still heading to Brazil. Maybe it's more than 12 billion. Maybe we end up seeing a larger package coming still. I can say that that's less likely to happen if beans were to rally from here.
Justin, the way that the front end of the bean market's acting, we saw a big jump in open interest too yesterday, up about 16,000. But the way the front end's acting, does it feel like maybe you're getting some business or things are starting to shake loose there in the bean complex?
Yeah, I think for sure, I think it's a question of, we got super wide, basis got, really wide. So we're coming off of, kind of extreme levels. And you get an announcement like this, I'm guessing if I'm an end user and I've been sitting on my hands, I'd probably go get coverage. So, the question is it China that's bought all of it, or just, maybe some combination of them buying some and everybody else just be like, okay, like I have to get coverage now. Right? Like that's what I would do. If I've been sitting there waiting, be like, why would I would just be hand to mouth until things get resolved, and something like this comes out, you probably scramble to get some coverage. So it's hard to tell, what it's coming from, but yeah, I would say certainly some business being done. I don't know that we know who doing it, but like I said, if you see that there's something that could be uneconomically forced, you have to buy, say you're a crusher even, and you have to get some coverage, like you would probably go get coverage. Coming from, kind of wide spreads, wide basis, pretty cheap prices. Now we're not necessarily cheap anymore, but when you were $1.50 plus, under basis out west, because there's no business being done off the PNW. There's a lot of crushers out that way. There's a lot of, other people that, obviously buy our beans. So I'm guessing they're getting coverage here.
Ben, what's your thoughts this morning?
Yeah, it's been a good run up. We've been up 7 out of 8 days in beans. The one thing that's perplexing to me is, Justin alluded to this, is the options have remained relatively cheap. They're kind of in a mode now where they're not eroding, and it appears that vol is creeping higher. But I think it only takes a few of these 20-30 cent whipsaws to change that. It's not something that, as a market maker, I would want to be short that kind of movement. I think wheat has a little bit of an interesting story here as we go into the roll, which starts on Friday, and a market that's heavily short. Globally, we're short a lot of wheat, and it's going to be bucking up against some pretty big resistance around 560 in the Ds here. But I think there's a little bit of relief into it for the short with the roll. And if you don't see relief in the roll, I think that should really make the hair on the back of your neck stand up. Corn range bound, right? There's just a tremendous amount of 430 trade. And, we're getting here towards the last little bit of harvest. And, hopefully it can find some footing and not get kind of rug pulled on the report next week. So beans are resilient. Not surprising that we had a big down day after the rally that we have. The auction it's to a point where the buyers say, okay, we need to back off for a minute. Some people take some profits. I don't think it was a full scale rollover. But yeah, it's, we're at interesting times, interest rates getting lowered. Maybe some of the outside markets showing some weakness from some different things. The equity markets have been on an absolute tear for a number of years. And optimistically, in a perfect world, we see some money move into physical commodities and what, kind of historically relatively cheap agricultural commodities, so.
Yeah, I mean, beans last night were within 2 cents of making new highs for the move last night. So had big sell-offs. I mean, we're just, to Ben's point, I mean, volatility is picking up. And I look at, like I said yesterday, going into this report next week, and you have D's options with such low vol. If I had a big opinion, I mean, there's some really cheap plays going into this report to not have to have so much risk.
Yeah.
If I'm a guy, like I read some of these people that, they're convinced the national yield's gonna be 175 or 6. Well, if you really think that, there's a lot of really cheap options you could load up on. If you really thought you knew that much better than the market, there's some really cheap option plays.
Well, and I think a general comment here is, we've mentioned before that turns in markets can be really hard. And I don't know that, I'm not going to throw my flag. I think beans have turned. I mean, on the chart, you can't deny that they've turned. But for soybeans and corn both, anyone who's selling weakness is not getting rewarded. They're, even soybeans, when you could hear, we mentioned this a few weeks ago, the narrative was so overwhelmingly bearish, but you could see that there were big buyers on down days. And corn is the same thing. It looked terrible early yesterday, and you get to the end of the day and you're like, wow, someone really stepped in and took on all of this selling. So whether or not corn is in a turn or not, I think the USDA gets a vote in that. We'll know a lot more once we get that. But certainly the people who are selling are not getting rewarded. That momentum shift I think is noticeable when you look at the end of the day where volume's trading. And maybe that's part of the turn. The people that are like, goes up, I've been in this before, and it goes negative, and you're like, all right, I'm gonna get on the train because I think it's going to $4.05 or $4. And you see some heavy selling, and it just gets absorbed. And that's just kind of keeping my eye on that, because again, I think major turns in markets can be really, really painful if you don't at least have an eye on it. So,
got a chart question from Kyle. Says, is there like 60 cents lower? Is there a gap too that kind of gets interesting and can scare you if you turned lower?
And wheat,
pull that up.
Yeah, no beans.
No,
yeah, I
beans.
mean, there's one in Jan from call it 1060 to
1063 to 1068ish, call it on Jan.
Yeah, that's why I think you could buy some cheap puts there. If you want to try to play from the long side, or if you're worried about it turning down. Yeah, I think options are such a no-brainer trade here for the next 2-3 months, if you have a strong opinion.
I had a question for you, Justin, too, on this, because, when it comes to the trade deal, isn't there a lot more to be negotiated? Did we just this is a short-term thing? Isn't there a lot more line items we have to get through still?
I think so. Yeah.
So what happens when the next item is just a roadblock, right?
Even some of these, just not the two main players, right? You have a lot of generals, other people that are helping, and they're making comments this could all fall apart if X, Y, and Z aren't met, and still Taiwan comes back in the conversation, and I think there's still this underlying China 2025 initiative, and these bigger things that we're just not going to come to terms with. Then you get into NVIDIA chips and just bigger strategic things that both countries want. There's a lot of things that could go sideways here.
Well, let's not forget too. I mean, Jameson Greer came out and said that we're still investigating them for trade practices. There's so many things, to your point, Justin, that could take this thing off the rails real quick. And that was post truce. We're still investigating. So what are you going to find there?
Right. And I like I said, I'm a huge cheerleader for this move for obvious reasons, but at the end of the day, I still don't know how you force a country that doesn't need the commodity to take it for 3 years. Yeah. And then you have the rest of the world South America is not going away. They've got so many more beans than we had even, back in the 2018-19 trade war. There's another, was it 50 plus million tons since then? And China growth has been basically flat, maybe slowly up, but they're not going to go from 100 million tons of imports to 120 or 30. I don't think. I think their crush margins are under pressure right now. We've talked about this a lot of times on the show. They've changed their feed rations. Their population growth is negative. So I think it's an uphill battle. So
I want to say one more thing about gaps.
I like it.
Yeah. I think trading gaps is one of the most difficult, dangerous things for a person to do, to build a hill to die on. And I'm going to give an example. Corn left the gap, call it 524 on our way down 2 years ago, maybe a little longer. We traded all the way down to 396, or 386 and 3/4 before we rallied last year, and you kind of say it was filled in. So your time frame And those gaps are there for a reason. Something seismic changed in that market. So if you're looking at it and saying, I'm going to sell it because I think it's going to go back to that gap, good luck, because the gap is there for a reason. Time frames, right, are important in these. You can go broke trying to trade that narrative. I would look at that gap as, if for some reason we were to go down there and fill that in the short term, I would think that would be an opportunity, a place to get long. I don't think we're going back down there anytime soon. Could be wrong. Could happen tomorrow in soybeans. But I think it's important to notice that gaps are, keep it in context and in the back of your head, but don't form a strong opinion that you have to go fill this in. You might be right. More likely than not, the market wears you down long before you ever get a chance to fill that gap. Just like now, if you sold it 30 higher off of that, well, you're out 30 cents and everything looks good. So, gaps are there for a reason. There's a reason that we had that big of a push higher. That was this Sunday night trade. So I think it's just important to share that. Like, gaps alone by themselves, for me, I don't get that crazy on
Yeah,
them.
Ben, I agree. We used to, back in the day, all the fundamental guys sitting in the old war room when we would talk before the open, but we'd talk about gaps like, if you fill it, maybe within a few days.
Yeah.
But after that, we would always joke like, yeah, eventually you'll fill that gap. And then guys will be like, look it, we filled it. Yeah, 6 months later or 3 months later or whatever. But no, I completely agree.
Yeah.
Very good. Got a minute here, Rye. Why don't you give us some thoughts on cattle and hogs here before we wrap for the day?
Yeah, cattle just once again succumbed to the headlines. Looked like you had a sell-off, just a complete risk-off move. Some of the comments by Ag Secretary Ryland, just kind of reaffirming that there was no date for the border, but in the same breath, kind of stated that Trump wants the border open sooner, or sooner rather than later, and the market just tanked. So, I mean, we're just super sensitive to any kind of news regarding the border right now, and it seems like that's really the focus. No one wants to get caught long in an environment where we can finally see the light at the end of the tunnel. So obviously we're going to stay pretty sensitive to that, but and cash market optimism was kind of starting to prevail here. But as of right now, it just seems like that there's just a lot more caution here. So, I mean, I know everybody, speaking of gaps, is looking at the feeder cattle chart.
I was just going to say that. Yeah.
Yeah. I mean, like, there's probably 2 or 3 gaps. And yeah, I mean, it would be great if we could just rally back, retrace everything, and forget, like, any of this ever happened. But as we talked about last week, I mean, yeah, this could be a long road until those actually get done. I mean, obviously, all you need is some good news or something to change. But right now, we don't seem to have that kind of momentum in us. Right,
Ryland,
now.
when was the border closed?
Back in May, officially.
Yeah.
Right. So, I mean, in May, just feeder cattle, right? You've rallied $90.
Yeah, they were around 296, I believe.
Right. So if you think about it, like, that last leg was because of the border closing.
Right. And so that's been something that I think everybody should just kind of not set their sights on, but just be aware of. Like, this move really was kind of enhanced just by that narrative alone. I mean, we had, managed money carrying a third of the open interest here. I mean, like, yeah, the feeder market especially is not a liquid contract. So all it takes is, a massive liquidation. We've seen this several years ago, especially during this time frame, where you see them flip and just go from either a big long position, a record long position, to a flat position, or even a short position. I mean, like, and the results are devastating. It's a much bigger move than people would anticipate because of that lack of liquidity. I mean, obviously the cattle numbers are still not there, right? We're trading a situation that could be years in the making, herd rebuilding, heifer retention. But it's just that's a long road, and nobody wants to get caught, long in a market that's expanding from what from what it looks like. So hopefully we can get some better news. But yeah, I mean, obviously the market's struggling. We ran into resistance in the live cattle market yesterday, right at just kind of the 10-day moving average. So nothing even really that exciting from a technical standpoint. So yeah, there's still quite a bit of risk here overall. And then on the hog side of things, I think there was some sense of optimism that China said that they were going to relinquish the retaliatory tariffs on some U.S. farm goods. That could definitely be supportive, I think, overall. I mean, this market really needs some kind of new demand sentiment here just because it's been straight down for several months now. So, and overall, we just haven't seen a whole lot of upward momentum in fundamentals. Cash market just kind of steady yesterday at 84.70. Bellies down $1.50, carcass down 250, carcass down below $1. So it's just you've kind of baked in a lot of negative news on the hog side of things. Maybe you could get a little bit more support or at least some short covering here, just to see a little bit of a bounce. But it still seems like it's kind of a sell rallies kind of market here on the hog side of things, especially with the seasonal trend being negative for cash.
Very good. I appreciate the update there, Rye. Just came into the open. We'll get a quick readout here. December corn down a quarter right now, 431 1/4. Jam beans are up 3 3/4 at 1125 1/4, and December Chicago wheat's down 3 1/2 at 546 3/4. If you'll remember, for those of you that are frequent visitors to the War Room, a couple weeks ago we hit our 500th show. Well, overnight, we have hit another milestone, guys. We've got 1,000 subscribers. So I know psychologically in the YouTube world, I'm told that that's a big deal. And so certainly we're very appreciative to everybody that supports the show and tunes in and hits the subscribe and the like button there.
Do we get one of those YouTube plaques that you can put behind you, Dan? You know?
I think we might make one.
Jack, work on that.
Yeah. I'm guessing that's maybe a different tier. We'll look into that. But hey, I mean, let's go. You know, Jack was pretty excited when I saw him this morning, so that works for me. But no, in all seriousness, thanks to everybody that supports the show. We have a fun time doing it. We hope everybody gets a little something out of it there. So. If you wouldn't mind, throw us a like and subscribe. It doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody again that is supporting the show. We're doing it live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.